Hi guys, welcome back to my channel. My name is Sithini. Thank you for stopping by. If you like the content that you see on this channel, please feel free to subscribe, to like, to share and to leave a comment. Today we are going to be talking about 5 things that the bank doesn't want to see when you apply for a mortgage in Ireland. Number 1 is bounce debit or missed loan payments. So if you have any debits that were supposed to come through about bounce, the bank will request 6 months bank statement, and when they see that off any bounce debits off going off on your bank statement, they'll be very wary to offer you a loan, because as a lender you are at high risk of missing out payments. So make sure that all statements that you submit to the bank are clean, there's no bounce debits, everything is paid on time, and there's no bounce debit fees coming off. Any loans that you take out over the years, make sure that you pay them on time. Make sure that you don't miss out on any loan payments at all. This is a big mistake that younger people make when they're starting out in the job market, because they're like, I'm gonna pay that loan later, as long as I paid, it's no big deal. It's not a big deal at the moment, but when it comes to applying for a mortgage 5 years later, that'll come and bite you back. So make sure that you do not miss any of those loan payments. Currently, as of 2020, and in Ireland, obviously, possibly this will change as time goes by, is that a lot of banks do not want to see any COVID related payments. Like let's say you are working and you are on a COVID subsidy. The banks unfortunately do not want to see that. The moment you say that, they will say, if you're on COVID subsidy or any COVID payment, please come back to us when you are off the COVID payment. So they will put your application on hold until the situation has stabilized. And I think this is very unfair, because this is a pandemic that has affected the whole world, but I guess business is business, and lenders want to make sure that their investments are secure, their monies are secure. So if you're full on COVID payment, staying at home, even if your job is secure, it's just a temporary closure, they'll tell you wait until you go back to work. Or if you're working certain number of hours and then the COVID subsidy is paying you for the other numbers that for the other days that you're not going to work, they won't accept your loan application, unfortunately. This has been said by most of the banks that we've applied for. I don't know about Rebuild Ireland, but I know for banks like AIB, Permanent TSB, Bank of Ireland, they've been saying that they require a letter from your employer stating that you are not on any COVID payment. Another thing that banks don't like to see is that you are saving your deposit, but you're constantly going back and taking your deposit out, even once or two a month. Once or two times. They do not want you to touch that deposit. They do not want you to touch those savings for the entire duration until they give you a loan offer. You do not touch your deposit unless it's to pay for the booking deposit. That they will understand. But to take money out because let's say you ran out of money this month in your bank account, so you dipped into your savings, even if it's a small amount like €100, lenders will make it very strict for you to get a mortgage, and they will tell you nope, you do not have the repayment capacity because you're constantly dipping into your savings. So what I would suggest is open a savings account that you don't have access to it impulsively. So you could open a savings account with your bank and tell them not to link it to your app, or you could open a savings account with a totally different account in your savings and not get cards and all of that for that account, and then whenever money goes in, you don't actually see that there's money in the account, and everything stays like that, and then it's all good. So that is one thing that is very, very important. Make sure that you do not dip into those savings. Something else that the banks obviously don't like to see is you taking out a loan for the deposit. Unfortunately, the deposit to your house must be savings that you have saved yourself, unless if you are unless if you're applying for the Help to Buy scheme, then you can join those two together. They won't accept the Help to Buy on its own, so you would need to have your deposit saved yourself, consistently save it over 6 months. They will take into account your rent, the rent that you pay as well. They will include that in when they are checking for your repayment capacity. But you cannot apply for a loan and then put that loan and say that is going to be my deposit for my house. Nope. The banks will not accept that. They need you to save for your deposits separately. So that's it, guys. That is a quick video, straight to the point, about few things that banks don't like when you apply for a deposit. So thank you very much for watching. If you don't follow me on Instagram, please do. I will leave a link below that you can click and go and follow me. And thank you so much for watching. If you have any questions that are related to mortgages that I feel that I have experience with and I can answer, please leave below and I will try and answer them in the best way possible. Thank you, guys, and I will see you in the next one.